Today, let's ask the question, what is initial margin? In the world of finance, particularly in the realm of trading and investments, the term initial margin holds significant importance. It is a crucial concept, especially in the context of margin trading, where investors can leverage borrowed funds to enhance their market exposure. So, what exactly is initial margin? Initial margin is the upfront collateral required by a broker from an investor to open a position in a financial instrument, such as stocks, futures, or options. It serves as a security deposit, ensuring that the investor has the financial capacity to cover potential losses. The purpose of the initial margin is to mitigate the risks associated with market volatility and to protect both the investor and the broker. When an investor decides to engage in margin trading, they are essentially borrowing funds to amplify their market participation. The initial margin represents a percentage of the total value of the position, and it acts as a buffer against adverse price movements. Different financial instruments and markets may have varying initial margin requirements, reflecting their respective levels of risk and volatility. For example, in futures trading, the initial margin is predetermined by the exchange and is typically a small percentage of the contract's total value. This allows investors to control a more substantial position with a relatively smaller upfront capital outlay. However, it also exposes them to the risk of losing more than their initial investment if the market moves unfavorably. One key aspect to note is that initial margin is distinct from maintenance margin. While the initial margin is required to open a position, maintenance margin comes into play during the life of the trade. If the value of the position falls below a certain threshold, which is the maintenance margin level, the investor may need to deposit additional funds to meet the margin call and avoid the position being liquidated. Understanding initial margin is a paramount option for investors venturing into margin trading, as it directly influences their risk exposure and the capital requirements to enter the market. It emphasizes the importance of responsible risk management and highlights the dynamic nature of margin requirements in an ever-changing financial landscape. As with any financial concept, staying informed and mindful of the associated risks is crucial for navigating the complexities of the market. Please note, while we may discuss finance, investing, and money on this channel, this video should not be considered financial advice. When investing or making plans for your own financial security, please seek the guidance of a licensed professional capable of making more informed decisions. If you make a financial life decision based upon the content of this video or channel, then please do so at your own volition and at your own risk. This channel and the people associated with it should not be held liable for your investment choices.